There we go. Hopefully that worked. Hey, Dan Fox, thanks for being a channel member. Welcome, everybody. Hopefully I'm live. Maybe somebody let me know after the faux pas last week. There we go. There we go. Dun, 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 dun. Start a poll. There we go. After last week, I felt like a dum-dum. You can ask Kimberly. I was on and on about it for half the night. Half the evening, I guess. Anyway. Alrighty. We got the December rally potential. So typically in the market, we get this rally in December. December to remember Honda days and Lexus, whatever they call it, and Toyota-thon. I don't know. All the crazy try to sell some cars for Christmas. Tesla needs one, I guess. And actually, I thought was interesting. Tesla announced that they are sold out of their China production through January. I thought that was interesting. At least that's what I saw. You feel free to double check me on that one. Somebody says no, apparently. Thank you very much. Hopefully you see me live. A couple people said no. All right. Well, let's do a real poll. Let's see. Remember, it's anonymous. I don't see the answers. So, did you have a green day? Did you make money today? Did you make money today? Welcome, everybody. Yeah, so I'm just kind of chilling here, making sure everything's kind of working. And I was going to pull up the seasonality charts. What did I do? All right. Seasonality, baby. That's what I need. Seasonality. Nasdaq right here. That's the wrong one. Let's see. That's volatility. Doesn't help much. Here we go. Nasdaq. Pull that over. Check this out. December. Start out rough. Get a little pop. Kind of. I mean, we're just churning. Like, we had this little end of the month rally, right? Got a little churn, and then somewhere second week, FOMC day, potentially kick off that last bit of Santa rally. See if it actually holds. Can we actually do it? Can we actually do it? That's a good question, right? And then here's, oh, click on the right window. Here's the S&P 500 seasonality. This is the average over 20 years. Here's typically, that's the Santa rally right there. Typically starts a little pause, and we finish the year strong. Past performance not necessarily indicative of future results. That's one of those things, you know. Got to be careful. Don't necessarily bank on it. All trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. I just said that. This presentation is intended to be informational, educational, fun, entertaining. Hopefully you're entertained. It's not a recommendation to be buying or selling any financial instruments, including stocks, options, bonds, forex, futures, cryptos. If you trade, you might lose money. So, paper trade, probably a smart idea. If you need somebody to tell you what to do, there's people you can hire for that, but let's face it, nobody's going to watch out for you more than you. If you don't know how to figure it out, paper trade until you do. I probably should have paper traded more, quite honestly. I was always in such a rush. And tell me if this is you. I was always in such a rush to make money. It's like, oh, I'm so far behind. It's only like a self-inflicted, like, far behind. I felt like I was behind my goals. Like I wanted to be further along at certain places in life to meet some, psychological goals. And I've always felt like I was behind. And when people say it's not a race, what they're telling you is that lose that mentality of I gotta make X dollars today. I gotta get out of this funk I'm in right now. Until the time such time as you know that you can push more chips in. Somebody was asking me the last couple of days on my beer money trade, and they're like, "Well, you pushed like 9 contracts. That's $45,000. What if the S&P or what if the Nasdaq dropped and you lost $45,000?" I was like, "But it didn't drop. I didn't lose $45,000. It was a calculated risk. I was willing to risk that money to make my $300 to $400. And today it was a little lighter. I mean, made $280 in one account and another $80 in another account, so $360 today. Yesterday it was like $415. That's pretty good beer money at this point. It's almost like paying the rent money, getting above getting above beer money. So, trading is just kind of a way of life. It's not really, yeah. I've commonly said this. It's a way of it's a different way of making money using money. You've got to, if you just have a little money, you can just make a little money. If you got a lot of money, probably should start out making a little money and then work your way up to making a lot of money. So, and this is, people can lose hundreds of thousands of dollars. Yeah, you can lose money fast. The old adage, how do you make $1 million in the market? You start with 10 million, lose 9, you got $1 million. It's tough. I've met several $1 million traders over the years. I went fishing with one that had made $30 million in the market. Took me fishing one day, deep sea fishing out off the coast of South Carolina. It was cool. He didn't tell me a darn thing about trading. We didn't talk about trading at all. And we just talked about fishing. Caught a bunch of wahoo. It was a great day. But you got to surround yourself with people that are good at this. And Sledge was talking to me a little bit ago, and I was like, I try to build the best group of traders. Several of you make tons of money. David, I know, I don't see him on here at the moment. David's on track to make more than $1 million this year. Sledge has been cranking out huge numbers. My account, my one taxable account, this is just one of many accounts I trade. But there you go. I mean, it's not a chump change account. It's about $100,000 account. Doing pretty good this year. Year to date, 38,000. Pretty good chunk. Consistency. Where's the big dips? There's none. I don't take big losses. I don't take big risks in this account. I do these beer money trades. I'm talking about, like, there's 7 contracts right there. It's $35,000 I put up to do this trade. Maybe like, well, that's nuts to make like $300 on that kind of money. That's cool. I mean, I've shown this off before. You make $40 on a $5,000 risk. 0.8% a day. You do that 250 trading days a year. That's 200% is what that is. That means just making $40 a day on $5,000. Just being able to make $40 a day. It's not even that much, right? Barely enough to, seems like barely enough to go to McDonald's anymore. $40 a day, if you can do that 250 trading days, that's $10,000. And you still have your original $5,000. So now you got $15,000. Right? So if you're trying to make, I mean, and this is, it's a safe play, but it's a relatively risky play, making 200% a year. Most of these that I do, I just try to make 40% a year. The higher the risk you go for, the more you can lose, right? I mean, there's risk and reward. So it's a calculated bet I make in the market. And I try to stay 3 standard deviations away. Why 3 standard deviations? Well, when you look up a standard deviation curve, which let me just type it up so you don't have to believe me. See right here, AI says 3 standard deviations is a statistical measurement representing the range containing 99.7% of the data in a normal distribution. So you assume that take any trade, 50%, 50, flip a coin, right? Any trade with the naive condition, you don't know anything about it. 99.7% of the time, if you can be at 3 standard deviations from whatever result, means you win 99.7% of the time. That's why 3 standard deviations. 1 standard deviation is only 68%. 2 standard deviations brings you up to 95%. That's not good enough to me. 99.7. Now, why 99.7? Why is that seemingly good enough for me? Take 250 trading days, making $40 a day, times that 99.7% win rate. That means 249 and a quarter days are going in my favor, right? I did that wrong. I need, trying to remember how to do the math for that. I think it's 250 divided by, I don't know, 1 over x equals 1 over 99 equals x over, or 1 over 99 is point, oh, I know what I did. 1 divided by 0.003. So you only lose once every 333 days when you're playing 990, if you're playing the odds and the odds catch up with you. Now, you can be smart enough to miss the day the odds aren't in your favor. FOMC days, big down days. I got caught October 10th, but that was before I was playing it the way I'm playing it currently. So what happens? I don't have a real true test on this trade, but I'm trying to play it as smart as I can. So that's why $40 a day on a risk that I perceive is very low. Yeah, I'm only at risk. I'm only putting this money at risk for like 2.5 hours. Look at this right here. Got in like 1:30. Closed out at 4. And there's no extra innings. There's no extra. Everybody's used to options like Tesla, where it keeps trading past Friday. You can still get put up to Saturday. But on Nasdaq, when these options close for the day, whatever this price is, that's the price. There's no extra anything. That's immediately the price for the day. That's the settlement price. There's no extra trading. There's no extra moving. That is the price. If you're in the money, it's cash settled. If you're out of the money, it's all zero. I like that. It's different. And these count as 1256 contracts. Section 1256 in the IRS code. If you've never played that before, let me grab this and Google it. Right here. Section 1256 contracts are financial instruments governed by specific tax rules under the IRS code, and they mark-to-market accounting with a 60% long-term and 40% short-term capital gains treatment, no matter if it's a trade that you held for 2 hours or if it's a trade you held for 2 years. Beautiful, right? all of a sudden 60% of my gains are taxed as long-term gains. Another benefit. So stacking it up, keeping as much money as I possibly can. I like it. You can let me know your thoughts in the chat or in Discord later. But that's why high probability trades. All right. How do you find them on? People are like, how do you find these on the option chain? I go in here. That's one standard deviation. That blue line right now. It's still got 1 day to expire. Right here's the 2 standard deviations. You can count how many strikes are here. Like 290, that's 100, that's 200, almost 250 strikes. So you'd have to be down here another 250 strikes to be add another standard deviation and be the 3rd standard deviation. You come down here, it'd be roughly right in here somewhere. Oh, look, right around $2. This POP on Tasty Trade also happens to tell you when it's 99.5, 99.7, 99.5, it's pretty close. They don't actually tell you the 3rd standard deviation, but they get pretty close. Now you can roll this in here. And you can see right now, it thinks all of these are 3rd standard deviation. Right there, you start jumping down into the 2 standard deviation. And they actually have a curve and stuff. They, you can draw this stuff, switch to curve mode. You can see where the standard deviation lines are. And that's all like where you get the expectancy of how this might get in the money. There's 1 standard deviation, there's 2 standard deviation. This is where I was hanging out here. And it changes. Like it's what it is right now for these 1 day outs. This curve sucks in because the less time you have, the smaller the move it's going to occur. So I've learned a lot of this stuff. I took engineering statistics and a lot of it went up when I took it. And it really aggravated me because the professor was like, all those tables in your book are wrong. Go buy my tables down here at the copy shop and pay blah, blah, blah for it. And I was like, okay. So somebody's published a book with statistical tables in it, and we're going to throw all those out and use these printed ones. It's been my experience that statisticians all think they've got the best statistical tables and everybody else's tables are wrong. But I just play with the standard deviations because time and time again, you're 3 standard deviations away. Can you still get hit? Sure. And I talk about it all the time on the trades I talk about in the morning too. When I talk about these trades down here, these trade setups for the day. How much time should I buy so I don't run out of time on the option? Right? Here's the entry. The average trade takes 45 candles for this pattern to play out, to go from here to there. Average. But a standard deviation on this is 35, which is, if you do the bell curve and you're like, well, the average is 45, that means, zero's right over here at 40, right at 45. 1 standard deviation puts you at 35. So 2 standard deviations on the downside puts you negative. Well, there are a few trades that hit in 1 day, but they aren't going negative. But the crazy thing is to get the 3 standard deviations. 3 times 35, and you add that to 45, the average, to get your upper end. When you're buying your options, you got to go out like 150 candles. Now, this is the same whether you're playing on the daily chart, or you're playing on the 30-minute chart, or the 15-minute chart, or the 5-minute chart, or the 1-minute chart. This is why in triple threat, when we get to about 1:30 in the afternoon, it plays the next day. Because 150 candles puts us into the close. When you get like thousands of trades a year, well, that starts to be quite a few trades that roll into the end of the day. That's why we roll forward, starting about 1:30 in the afternoon, or tripled that. But if you're buying options here, 150 candles, remember the candle maker isn't open on the weekend, so that ends up being about 7 months on the daily chart. So don't run out of time if you play these aggressive options. Now, Walmart, I pointed out this was a freaking banger trade right here a couple weeks ago when we got that candle close right there. It dipped back down. I never took action, but boom. It only lasted 1, 2, 3, 4, 5, 6 days, and it hit the target. Well under the 45-day average. Beautiful. This trade only sets up like once a year. I should have taken it. Heck of a trade right there. Beautiful. Beautiful trade. The statistics on this baby are just unreal too. Unreal. Grab Apollo. There. Look at this. 69 trades since 1972. You're like, oh, 68 doesn't seem very good. But we go to a custom date range. Put this in. One 2000 for the last 25 years. Check this out. About one trade a year. 92% profitable. Profit factor at 9.7. This is a good trade. This thing tends to trend, pull back, and continue. It's a pretty banger trade. I really like it. The success continues onto the 4-hour. About 2 trades a year. Not quite as winning, but still pretty good. You got to go after the higher probability stuff. That's kind of what I'm saying. Do I always get everything? No. I don't always get everything. Awesome, Penny. Glad you got it. Great work. So yeah, I surround myself with awesome traders. Like, you guys kill it. I mean, you really do. So many of you. That's why we have the community and Discord to talk about stuff like this, to share it. So many of you absolute crush it on these trades. I love it. Love to see it. I just build the cool stuff, and then you guys like take it and surround myself with awesome people that make awesome money. So it's part of the whole thing. Then we've got the FOMC coming up next week. So pop this to the today. Kind of a benign week, really. Got some PCE coming out on Friday, but that'll be too late for, more than likely, that's too late for them to take it in consideration for the rate change on next Tuesday, Wednesday. So their meeting actually starts on Tuesday. And usually they've already decided their personal whatever by the time they get to the meeting on Tuesday. And then Wednesday will be the FOMC meeting the rate change announcement and blah, blah, blah. So they start meeting. It's a 2-day meeting. They start meeting on Tuesday, wrap up on Wednesday at 2 p.m. So we'll get the press release, and then Jerome Powell cannot resist speaking ever since he's been in office. I don't know if this will continue after we get a new Fed chair, but we'll see. Kalshi and poly markets given 80% chance that Hassett, however you say his name, is going to be the new Fed chair. Basically a Trump plant, and I don't know how that'll play, but we'll see. Don't know that the rate change matters much. You know, some people say, oh, it matters hugely, but we don't really have any room to cut any further than we already have. So it may be a surprise that we don't cut. And you know what happens if we don't cut? Probably a pullback in the market. Now, there's been lots of Feds out there, Fed chairs or Fed members out there speaking and saying, yeah, I think we need to cut. We need to ease some more. but we're cutting right into the DGS2, which is the 2-year constant maturity rate. And it's sitting right, there's not really enough room to cut again. If they cut and get below the market rate and the market rate starts going up, guess what they have to do? They have to look like idiots and raise rates next year. First thing. So. Also, I talked about this morning that with liquidity being funky and the Fed continuing to dump their mortgage-backed securities and not be a buyer of them, that mortgage rates may go higher, even in the face of down pressure on the rates. These are not mortgage rates. These have nothing to do with mortgage rates. Now, this rate getting cut, I've actually even argued with AI about it, and it admits that I'm right, but not right. It's even so ingrained into everything that's on the internet that the AIs think that DGS2 that the Fed rate sets this rate, but it's not true. Like the DGS2 runs separate, and it actually pulls the Fed rate down, and then mortgage rates and stuff are kind of independent. Actually colluded by banks. Kind of crazy. So big, crazy, mixed up world. Anyway, we're going to do requests. Rules of the game go 1 request per person per request. Please use capitals. If you got a question that goes with it, please use complete sentences. No use of this, that, these, those, it, they. Be specific when you ask a question. That way I can quickly get to the matter. If you refer to, that was awesome, please tell me what that was, the ticker that you appreciated or whatever, because the chat will go quickly. I'm going to hit as many as I can in the next 30 minutes. Then we'll switch over to an Ask Me Anything for channel members. And I'll hang with channel members until you guys are happy. But I will go home and eat dinner sometime this evening. So, all right. First thing first. Let's see. I see a STRL. Let's see what that is. It looks like that's coming back to the roadmap line. More than likely. And then number 2, ACN. Come up into the roadmap line. That's resistance. Zooming out, looking at the bigger picture. Is that the bottom? Maybe, maybe not. Here is the high. 415. Lower high. Maybe. This did meet the criteria for this to be complete. Like, we got a lower low. It hit an A equals C, where this first move down and this second move down were the same size. Typically, we see it get a little bit lower, somewhere in the middle here between a 1 and 1272. Doesn't have to. Just hitting 1 is good enough. And now we've made a little progress trying to make a bottom. Zoom back down to a daily. We do have some higher lows. And we do have kind of higher highs, but not really in a big way yet. So really the resistance is sitting there at the roadmap line. We can get above that, back test it, hold it, turn higher again, get through a 618. That's probably what we're looking for right there. It's like Bitcoin, all the things I said about it this morning kind of coming true a little bit. We got that initial move up. I want to see this get continuation though. So we've got that reversal kind of forming there. We tested the 618. We came back up through this 618 right here. Set that stage for 94, 95, maybe 96. Then what we need to see is just get that continuation on up. We need to break through 97, get on up here at 107. So this, right around 96,000, 97,000, that's a danger zone. Danger, danger, danger. If we stop right there and turn down, it's going to be nasty. crypto winner. If we can break through, get on up here, maybe consolidate a little bit, we have a chance at breaking out to a new all-time high, possibly before the end of the year even. See what happens. So, hims and hers. Yeah, this thing just keeps being funky here. So we have that same kind of potential bottoming action. I want to see this hold this 618, turn back through. I use my drawing tool. Hold this 618 right here, turn back up, break through that, get through that daily roadmap line, and this uptrend of lows. Not just back test it and turn down. That would be very bad, very much bad. What I'm talking about, this kind of, it's not very clear, but you know, this uptrend that comes across here of that low. I want to see us get back through that because it's kind of a, we squeezed in this action here and then we broke down lower. So I need to see it hold there, turn and burn, get back above this, back through this, downtrend of highs, and continuation on higher. It's possible. I don't know. Doesn't look great right now. Right now we're in a downtrend with a lower high. Not my favorite. But if we can hold a higher low, let's get her at her. Get her at her, ain't it? Jack talks about this a lot. Jack loves this stock. We talked about it on Market Masters almost every day. And there's resistance right there. I have no real opinion until we're back above that 145 level. So we can do this very easily and go deeper. It's just common patterns I follow. That would be an ABC type correction. It's Elliott wave stuff. If you're not familiar, be a first move down, a retrace, and that will put it down in this zone right in here. I don't have statistics on a correction. Corrections aren't very, they're kind of hit or miss. All right. Once we get a daily close above the 618, there's still a 25% chance it's a correction, and we're going to do this. But there's a 75% chance we're going to do something more bullish when we get above that 618. So staying below the 618, odds are up here. Once we get above the 618 with a candle close, tips the odds we're going on continuation higher. Still a chance that it fails, but so right here, I got no real opinion. Like I don't know. I don't care. Now we could dive into smaller time frames, and that still looks like a downtrend. Even smaller smaller time frame. We've already broken through the 15-minute. We've back tested it. If we get the continuation, that's good. Just remember, all these patterns, 45 candles on average, standard deviation 35 candles, 150. It's a 99.7 percentile. So we did get a candle close above 132.27, but that's not any kind of all-time high. That's just a move right up in here. Then we may get a retrace. Then we may expand again. Same patterns, all time frames. Let me know if you're getting benefit from this conversation today. I'll try to do it a little different than normal. ARCC. Resistance at the roadmap line. The downtrend. That's a three-wave pullback. ABC. Continuation lower. That's why I'm always cautious about this. Being below the roadmap line. And we've got these A, B, C proportions. Right there. Puts it right up in this zone we could possibly move up into. See that move right there. There's a retrace to a 618. This move right here. And classic. A, B, C right there. And then continuation would be down. So you'd move the fib line from where it is here up to the top. That would be your whole correction. And then once we broke down below this price action right in here, it'd be an indication we're going to go lower. So right now, that's what ARCC has cooking. You can zoom out a little bit, and it's just sideways action anyway. Doesn't really, could just keep doing that. Don't have to do further correction either way. Doesn't have to go higher, doesn't have to go lower. Now, if we do get up to 23, this does pop up here, get a pullback, it's very likely we would see something back in the all-time high range, maybe 24, 25. Right there. But right now, no huge either way. DLO, that's a whole lot. Has customers in 16 countries. Cool. Chart looks bad. Downtrend. Lower highs. Marginal higher lows. I mean, maybe a little trend going here, but still lower highs than this stuff over here. Easily just break down. That's a 3-wave up. It's all corrective type moves at the proportions that would be an A, B, C. Trend was down. Continuation is down. So there's like 8,000 stocks. I just try to chase after the stuff that has good setups. Oracle potential to hold this breakout retest. We broke out from that high late last year. Made this big run up, ran out of steam, came all the way back to retest that breakout. So do we hold it or do we fold it and come on back down and retest this level down here? It's not even about fib levels at this point. It's just about, can we hold on to that breakout? Right there. Do we hold it? Let's look at a 3-day. That's what we basically did, a 3-day bounce. So we're going to hold that 3-day bounce. It's still good. Like the confirmation back above 272, upside 378. That's 100 points. Still good stuff right there. But as long as we're in here, it's like no man's land. Who knows what's going to happen? Could take another spill down. That was only, even though it has 3 little moves, this one disproportionately was much bigger than anything before it. So it kind of just looks like one big move down so far. We could get some crap that chops in here, comes back up to that 272 area, and then get another leg down very easily on Oracle. And next up, Lulu. If I don't hit your ticker, I'll cover it in the members only thing. Just throwing that out there. Lulu. I'll do the best I can to rip through some of these. Still hunting that bottom. Got it drawn better on this one. So we came right to the top of that target. And I just want to see it dip a little bit lower. 140 would be really stellar. I just don't trust it right there. Just don't trust it. We've got this gap down resistance. Gap downs are resistance. We're sitting there, we're just consolidating right under that. Easily dip right down in here. Easily. All right. Next up, Marvel. Chips Not Superheroes. Marvel. So, has potential. But it's a downtrend of highs so far. Did break above, keep inching that higher. And that was 1, 2, 3, and then we broke above, kind of back tested a little bit, but we're missing the continuation. We need some continuation. So if we can get above this high we made right here at 98, we could get some upside going. Looking at the bigger picture, this was like a weekly bounce off of this high over here. We had that high, we had this low. We're pushing through that 618 resistance area. 146 would be the upside target. And remember, that 45 plays out here. That's weekly. 45 weeks plus 335s. That's 150 weeks. That's 3 freaking years that this could take to play out. That's a long time. Anyway. be careful. Be careful. It's your money. It sure does look like. First move down, retrace. 1, 2, 3, 4, 5. Just be careful. First move down, retrace. Next move down, could put it down here in 67, in the 60s. Pretty easy. Pretty easily. Z-scaler. Let's see. Sizzle, zizzle, zizzle. That's a big 3-wave up. First move down. A, B, C potential. I would be very cautious getting involved in this. It's just got corrective price action written all over it right here. Be careful. Be careful, my friends. I don't have anything positive to say about ZS right now. PLTR. As long as we are under this right here. First move down, retrace. Second move down. Here's the potential. It gives you limited upside to about 182. And then your first move down. Copy pasted off of that rally. Puts you right down here, like 130. Very common pattern in the market. See it over and over and over. ASTS. Not been big on this one for whatever reason. I just, this one just didn't speak to me. We've retraced to the roadmap line, and we just kind of parked here. If we can get back above that 77, we could see some upside. But if we don't hold it, we could definitely take a bigger trip down. This has been quite elevated for a good long while. I mean, look, that was a downtrend all day long, and then we just took a little 3-wave move up. 1, 2, 3. We don't know what this was over here exactly before it went public. It went public as a SPAC, so who knows what the heck we were doing over here. Could be that we were sky high valuation. This corrected out. Was that the ultimate bottom? Oh, right now we just have a 3-wave up. Could easily come all the way back down. Very careful chasing this stuff. And we do have more upside potential, but be careful on that. So, yeah, be careful. It'll be my, I say be careful a lot. I'm perma cautious. I don't like to lose money. So, tomorrow, trying to throw spaghetti at the wall here. It's really just in a 2.5, was that 2.5 years of almost 3 years of consolidation? Just doing buckus. Stocks at rest. You expect it to stay at rest. This may not do anything. Now, if Bitcoin rips to new all-time high, watch for the breakout. But at this point, it's just kind of not doing anything. I keep selling options against it, but it's not really doing anything at all. Disappointing. It's been a disappointment. I have more in Tesla than I do in Mara now. Just slowly bled the options down. Soundhound just kind of grinding right here. I got put quite a few. I got put a fair amount of shares, like 500 in one account, maybe some more in another account. Yeah, definitely some more. I got put several. And 13 is my cost basis. So cost basis just sitting right here at the roadmap line. This just consolidating. If we pop, probably going up here. It's where we activated that upside target over here. So, but remember, this could take 7 months to play out. So if you're in some sort of short burn that you need this to be up here tomorrow, Hate to tell you. We're just a few months in already. Yeah, 7 months. Not super long from now, from that initial entry, but that only covers 99.7%, right? 99.7. I watch this on thousands of trades, so sometimes they can just keep going. They can go indefinitely. There's no upper limit. I can just keep going. Set on new all-time record. Long tail, as they call it. When people talk about the long tail statistics, you have the bell curve. Well, it doesn't ever get to zero. It's always slightly above zero. That long tail can have a whole lot of trades in it. That's SoundHound for you. OIS. See, got it a few weeks ago from your setups. Just wondering. Let's check on the statistics for this one. So 19, not statistically significant, but it does have a nice set of numbers here. So it got in here. Could take 7 months to get up here. And just like, there's nothing that voided it, nothing that wrecked it. It's just hanging with my homies. Oil States International. Yeah. This does tend to trend, but this last one, look, had a dip and a rip and a dip, and finally got there. So it took 1, 2, 3, 4, about 4 months, or just 1 month in. 2, 3, 4. It could be March or April, just based on the last one. DKNG. Donkey Kong. Let's turn that trade back off. So it's been consolidating for 2 years. Yeah. A little over 2 years, just doing nothing. Lower high. So it's a first move down, retrace, lower high, continuation. Doesn't have to do anything. Just keep farting around at this consolidation here. Right there. And just hate to see stuff like that. I like to find the ones that are moving. That's not that one. BBIO. Ooh. Pushing the all-time high here. One zoomer out. Potential for 5 up to be nearing completion here. First move up off of the wave 4. Yeah, this is in a danger zone for a bigger pullback. Now, it doesn't have to. It can just keep ripping. We can get to 95. We can get to 172. Just typically, the first move up and the last move up are usually in the vicinity of equal, which that's what that is right there. And then we pull back to the bottom of the 4. And funny enough, the first move up, 1, 2, 3, 4, 5, typically will stop in the vicinity of the prior high before we do the wave 2 pullback and then get the third move up. Now, that all said, this is biotech pharma. Biotech pharma does not always follow my patterns. Sometimes it just takes its own wild ride, does whatever the fudge it wants. More often than not, it's one of those things I don't trade it because it's that unreliable. It just doesn't follow the patterns very much, and it's kind of like the Matrix, I don't know what to tell you, kid. You got all the things, but you're waiting on something. How does one join your group? So, there's different ways. If you want the market roadmap line, $5 gets you, into the group. If you want to join more advanced stuff, links are in the description for more advanced things like Turnmire Trading Labs. So it just depends on which group you want to be in. I offer like I have like 10 different alert services. There's things like Apollo that operate on a 30-minute time frame. There's things like triple threats that operate on a 1-minute time frame. There's stuff like Cashbot that operates on a 2-minute time frame, but usually that's not day trades. That's usually 1-day trades. And I have a variety of other things that I throw out there. I have Echo trades that I've automated. Echo, man, I'm horrible at writing with this mouse right now. Echo operates on the 1 hour, and that's out there. So, all automated alerts, because I'm just one guy and I have no sidekick. It's just me. There you go. So, links are in the description. Just click the more button under the video if you're on a mobile device. Highly recommend you go back to a computer and go to my channel and find it. But that's how. FTX. And, you know, make sure you trust me. If you don't, I mean, it's all smoke and mirrors, baby. FTX is a lower high right now. Can it break out? It's always possible. That was not the roadmap bounce that I would be looking at. Not even sure that's the roadmap bounce I would be looking at. But that is so potential right here. You see the last one did not make it to the target. So this has actually been active for quite a while. This is a secondary bounce. Is that a tertiary bounce? Let's see. Did we hit the target from COVID? Yes, we did. Did we hit that bounce? We hit that target. That was the activation. There we hit the target. Then what do you expect? Retrace to the roadmap line. Pull it up to that one. There's the high. Here's the low. And we've got a secondary bounce inside. So primary bounce was active here. That was the entry. It did dip below the entry. If you've been able to hold on to this, you know, this is from 23. Yikes. If you've been able to hold on to this, it has potential to come on out here. But again, 45 candles plus 3 standard deviations. It's 150 months. Whew. That's like almost 13 years. This has only been almost 3 years. You got another 10 years this could possibly cook before we hit that target. And it's going to screw around in here for 10 years. But typically it works out. Crazy, right? Crazy. Oh, goodness gracious. Got about 5 minutes left. I'll try to hit some more real quick. Some more. Jack and I were talking this one today. They have no earnings, no nothing, and further downside potential right down in here. First move down, retrace 1, 2, 3, 4, 5. This will go on down. IWM, we bounced. That's the daily bounce. Target's 256. Stop is $1 below the low. Bet. Ooh. Forum Energy Technology. Let's look at what nasty chart this is. Yeah, I wouldn't touch it. This has the potential to bounce back up to here and still go down. And I bet you there's a reverse split in here. Let's go find it. Where is it? There it is. Dumpster fire trash. Wouldn't touch it. That's off my trading list. I won't trade stuff as reverse splits. Just won't do it. Not for me. I knew it was in there. You don't have a chart that looks like that. Stocks don't start out, stocks don't IPO for $400. That just maybe one or two, but this thing didn't. And the only reason it has that is because the reverse split in here pushed that price up in the history. And now we're down here and potential to go to 0. So don't touch that stuff. Danger, danger. DPZ had, look at that rip. See that rip off that low? Now we need to correct that. And that's why I expect first move down, retrace 1, 2, 3, 4, 5, lower low, back down in here. I'll probably already have it. Yeah, right there is the target. Yeah, it's already drawn. 1, 2, 3. And then this little baby 1, 2, 3, 4, 5. So we may bounce at the monthly roadmap line before we finally flush. But Domino's is due to correct back down to 250. I've talked about that for months, probably years now at this point. Hey, yo. I thought it would go faster. That's a lot of chop on the monthly chart. Daily chart doesn't look. I wouldn't touch it. Wouldn't touch that. Got no, like, stock at rest stays at rest. Just chopping in a range. Fox. Hey, Foxy, Foxy. At the resistance, watch for a pullback. Could come up to 73, maybe 78. That's how this works. And EME. Let's see, I guess I need to start my countdown. I'll give you a couple extra minutes. Start in 5 minutes. So if you're not a channel member, you got 5 minutes to decide if you want to, and if you don't, that's cool. But I'll just continue down the list, and it'll turn into Ask Me Anything. So when we get the members only chat, you can ask me anything except what should I do with XYZ. I won't answer that question. Never will. It's against SEC rules for me to do that. So EME, potential bounce. We need to move back up through the 689 to kick off the 815 upside. Merck. How we doing, Merck? I talked about Merck inside my video. If you haven't watched the video I put on the channel, it's got 5 executive orders that Trump issued that may be major players in 2026. This company was talked about inside there. So we're at the resistance. May get a pullback to the roadmap line. If we can break through. Upside potential, 146. Lilly was another one that was talked about in there. And NVO. I didn't actually say anything about NVO, but I explained why this one's not doing so hot compared to this one that is ripping hot. So that one hit the target already. I played this target too. Played that from there to there. And I'm off. So market's back open. Let's see. DLO. Yeah, we already talked about that one. And don't really care about other analysts or anything like that. Just a technical. I'm a technical analyst. Just look at price patterns. Don't really care about anything else. Although when a company doesn't make any money, I mean, it's kind of like a big red flag for me. Just be careful. The hype only lasts so long. This A, B, C potentially done. Looking for this to break back through the daily roadmap line, back through that 618, back through this 618, and get the finality move up to about 115. Still waiting. Might be a wait, but this does look like a wave 4 at this point. Got really close to overlapping wave 1. Close is okay. But if we get below this wave 1, doesn't look so good anymore. Right now we have 1, 2, 3, 4, and a potential for a 5. Just need that to go up. Need that move right there. So that's kind of the watching this right there. If we get below it, which we're right darn at it. If we get any like sustained move below that, like where we get a couple daily closes below that, not looking good. Not looking good. Stock UBX, B Blackstone. Talked about this in the video too. This is not a monthly, it's a weekly, I think. Yeah, weekly bounce. So we kicked off this weekly bounce back here. Got the entry, promptly retraced, double bounce. And this comes back up through again. Game is on. Now this could take 150 weeks. So from over here, that could be 3 years to play out. But this looks kind of bullish. So this is an area where you could sell puts potentially. Long term. Nice potential of 220 on the upside. Chill. Just kind of humming along here. Hum along. Golly. It's been kind of choppy. So this move right here hit the target already. Doesn't matter what time frame that was. Weekly. Already hit it. Kind of expect a retrace. And we're already poking below the breakout, so back in the 68 area. Probably be what happens. Ground. Probably going to get a retrace. CMG. All the standard stuff. Gap down resistance. And the roadmap line sitting right on top of it. That gap down resistance. So this has got a